We saw that the week started on a positive note. Midweek, there was a dip in the market which carried on till Thursday. Today, once again, we're seeing that the bourse is appreciated. What's causing all these changes on the bourse?
We think it's the profit takers, Fenly. As you're aware, whole year to date right now, the market has been strong, gaining over 7%. We think a lot of people who came in towards the end of last year and early this year decided to take profit. However, what we think we see is just short-term profit taking. We don't expect it to run into the coming weeks. Generally, trading today was a bit lackluster. Volume dipped about 22% to 352 million shares traded on the bourse. Of all stocks traded, 34 stocks gained, 29 stocks lost, while 62 traded flat. Among the gainers were still one of the key banks, one of the stocks we are watching, Guaranty Trust Bank was top on the gainers list. Also was Dangote Flour, Cadbury, and Benue Cement Company. Among the top losers were relatively small cap companies. There was WAPCO. There was, of course, flour mills, which saw strong growth in the last quarter of last year. Now profit takers are hitting into that stock as well. We saw Glasgow and ETI, which is one of the banks that was cleared, but of course it's got a large chunk of troubled assets on its books as well. So what we think will happen in the coming weeks is we will see continued appreciation in the index, but we don't think it's going to be aggressive in any way. We think for most of it, it's going to be timid as fundamental investors come back into the market, while we see continued short-term profit taking. Fenly?
All right, so you're not expecting a bull run specifically, but take us through why you're keeping a close eye on Guaranty Trust Bank of all the banks that's in Nigeria.
Yeah, we think it's one of the banks that may show very, very strong results for December 2009. As you're aware, GT, along with some 4 other strong banks, were best positioned to gain market share in the turmoil of 2008, 2009. And we think while GT is one of the banks, we're also watching First Bank, we're also watching UBA. Those 3 banks we think were best positioned in 2009 to take advantage of the turmoil in the market, both in terms of the financial markets, because they had the liquidity, both in terms of gaining market share because they were one of the few banks lending. Fenly?
Staying with the banking sector, we're looking at a scenario where Sky Bank, Standard Bank of South Africa, is showing some keen interest in buying one of the banks that were rescued, one of the 9 banks that were rescued by the central bank last year. Take us through how exactly this is going to work. Will the bank make a decision on a bid based on the price the central bank is asking, or with outstanding issues? How exactly is it going to work with the margin loan crisis, etc.?
Yeah, it's going to be a lot of issues CBN would have to consider. As you may be aware, CBN is not doing this for just the money. There are lots of considerations. One thing we do know is that key among those considerations is the competence and the professionalism of the banks that will be coming in. In that regard, we think Standard Bank may be one of the front runners. We also think a key concern of the CBN would be a bank that has an understanding, a fundamental understanding of our operating environment, and is willing to go into retail and into lending into the real sectors. But what we've seen in prior times with international banks is they come in, and what they essentially do is just portfolio investments. What the CBN is looking at is a bank that has that strength, that has showed in its own track record, retail expansion, lending to the real sectors, entrepreneurs and all. But we think in that regard, that may be a strong trend for Standard Bank. We also think on the side of Standard Bank, of course, as you're aware, they already have a presence here as Stanbic IBTC. When they came in here at that time, they didn't come in on the cheap. They came in at the height of the stock market boom. Standard Bank itself may be looking at coming in on the cheap right now because, frankly, this is one of the best times to be here. The European banks are hard of their rising. They're still reeling from the effects of subprime. The American banks, same. So the banks really will have the risk appetite, not necessarily balance sheet, but risk appetite to come into the Nigerian market with